Hey traders, Sam Shakespeare coming to you live. How's everyone doing today? Happy Wednesday. Alright, so what we have here on cable grid is a 5-minute reversal. I mean, you can see the 1 is below the 2 on the 1 minute and the 1 is below the 2 on the 5 minute. So it's making a hook pattern, right? That's your basic reversal multi-time frame pattern right there. Now there's a couple tweaks you can make, like whether you require the L1 and L2s to be crossed in this situation, or if you require the white zone to be collapsed or not in this situation, plus a few other settings as well. There's been a couple new additions also in 2020, so this is a good time. Basically, your entry mode can simply be, you can enter at the 1 or the 5-minute box. Now, mostly 5-minute entries, 5-minute reversals, you're going to enter at the 5-minute box. I will probably, maybe at some future time, add an ability to scale in at the 5-minute box, so you could maybe start at the 1 and then add at the 5, because in a 5-minute reversal, the 1-minute chart, which I can't show you right at this moment because I've got this control panel open, the 1-minute trend should start making lower lows and lower highs and start working on a downtrend. It may not be a totally confirmed trend, but it should have started already making lower lows and lower highs on the 1 minute. And also it'd be nice to have a lower low on the 5-minute as well. So 5-minute box entry is where I got this set. Now dynamic entry, just like with the other setups, you can do one click or dynamic. The dynamic is simply, say it's a 5-minute box entry, so this entry would be around 93. Once the price hits 93, then at that point it goes into ready status, or it'll give you the alert if you only have the alert only version. If you accept the alert, then it will go into ready status, and then once it's in ready status, it will look for, in this case, if it's dynamic, then it'll wait for a 5-minute bearish candle and a break below that candle low. So that's what the dynamic is. Stops here, 70 and 100. I've got it set there because I let the dynamics work. When you're referring to pips, you do have to add an extra digit. So the 0, it looks like 700 for 70, and it looks for 1,000 for 100. Now the target, this is something that I will be changing here soon within the next update, is that we'll have a 5-minute B2 target there, so you'll have a farther target. Lately we've been running these with the 5-minute L7, but I think there's a lot of merit in using a B1 or a B2 target as well. The one drawdown of using the L7 target is they get closer. So in this case, this reversal here that we're seeing on the 5-minute, here's the L7, this dark black line, that would be your target, right? And the stop would be the high here of the chart. So it looks back 100 candles. You can actually adjust that. So right now I've just got these disabled. I've explained those in plenty of videos. Here's some settings here that you kind of got to get used to using. These are the advanced settings. This how near to entry is 2 pips, right? So it's 20, but it's 2 pips because it's got that extra digit. That just means, look, it's supposed to enter at the box because we put box entry. If it enters at the box, then it can be 2 pips away from it and still count. So at 91, it'll start looking for an entry. At 91, it'll give you that alert. That's what that means. Now, enable swing stop. If you enable swing stop, I like the swing stop. If you enable the swing stop, that opens up a lot more options for you. First of all, what the swing stop is, when you enter the trade, whether it's one click or dynamic, when you enter the trade, then it's gonna use the last swing stop. In other words, the last swing, say you're going short like this trade, it's gonna use the last swing high as your stop. Now, it looks back how many candles define that high. I like for the reversals to go like 100 because I want to make sure we're getting the full high, right? I want to make sure it's the absolute high. So in this case, if we were to say enter here, or if we entered here, for example, because that's dynamic, right? A bearish candle and a break below that candle right there. So this would be dynamic. If we entered here, it would count 100 candles. What are the reversals in? All the way to 100, and it'll take the highest point. Boom. This is your stop. That's what the swing stop does. Now, say you're here in the trade, like we are. We're not in the trade. We want to look for the next one. The 100 would still cover this. If you go back 100 from here, that'll still be the high. But if it's too big of a stop, sometimes you might just want to get the most recent swing high. You might want to look back maybe 25 candles, and then just capture the most recent one. If like the 5 and 15-minute reversal, sometimes you can have 50, 60, 80 pips away for this stop, and you may just want to get the most recent swing high. So you can adjust it. This is actually 100 because it's not referring to pips, it's referring to candles. So you don't need to put an extra 0 on this one. That's what that is, swing stop, look back candles. Now this is a filter, right? Max swing stop size is an actual filter. So basically, if it calculates the stop, it needs to be more than, in this case, 70 pips to the high. You can make that adjustment to any size you want. Then it will filter out the trade. It won't take it. it won't take the trade. I've got it set kind of high because I'm using another feature that I'm going to show you. Minimum reward per risk on the reversals, this is what the setup looks like at entry point. So this is saying 1.5 reward per one risk. So basically, if it calculates that the stop is 30 pips away, then 1.5 is 45 pips. Then the target must be 45 pips away, or it will not take the trade. So these are two filters in the reversal that you can use to eliminate trades that may not have favorable reward to risk ratios, or the stop is going to be just so large that it's not worth taking. Right? Force minimum reward for exit. Now, the reason this is here is because this setting, the minimum reward per risk, is based on what the setup looks like at entry. But we know if you use the L7, it's going to come closer and closer, and you may not get 1.5 at the time that the price actually hits the L7. The reward per risk may have shrunk on you. So forcing minimum reward for risk, if you set this to true, it may require the price to move past the dynamic target to exit. So it'll make your trades a little harder to exit, but you're going to make sure the winning trades are at least what you wanted for a reward per risk. Now sometimes it may not matter because, say, the trade is a really good setup and the setup is 3-to-1 reward to risk, and in the time it takes to get there, when you hit the L7, you're at 2-to-1. Well, that's already better than 1.5, so it's not going to make that certain trade go past the L7 at all. Just the ones that the L7 moves close enough to where you can't get the reward per risk any longer. In those cases, then the price will have to move past the L7 to get your target. And that's what that's for. That's what the force minimum reward is for. All right. So if I have this set to false, then basically what could happen is this will still be true. I'll have to require the 1.5 reward per risk in the setup at time of entry. But if it takes a while to get there, this L7 could come closer and closer and exit you with only a 1 reward per risk, or maybe even a 0.5 reward to risk, or maybe something really low because that L7 came back to you. Okay, so setting this to true ensures that you at least get minimum reward per risk. Now, what's this next one then? Exit once risk reward is achieved. If I set this to true, then what that does is once you achieve your reward per risk, it exits you at that moment. So in the case I mentioned earlier where maybe it's a really good setup and you've got like 3-to-1 reward to risk, right? And then it finally, when it gets to the L7, you would have got 2-to-1. In this case, you wouldn't even make it to the L7 because as soon as you made 1.5, which might be not even, you haven't even hit the L7 yet, it's going to exit you out. So I hope you can see what the difference is between exit once risk reward is achieved. So this will exit you exactly at the reward per risk. Now, there is a situation here where you can have this set to false at the same time you have this set to true. So if you don't force it, but you do set this to true, exit once achieved, then it will exit once you achieve your risk reward. But because it doesn't force it, it could exit actually earlier as well by hitting your dynamic target earlier. Okay, so a little nuance with all these right here. Forcing it ensures that you get your reward per risk, or it'll lose the trade. It'll either lose the trade or make the risk reward on force. Now, whether you this will allow you to get more though. It will allow you to continue on. Whereas this will exit you at your reward per risk. You cannot get more than your reward per risk with this set to true. Now this is also new for 2020, dynamic lot sizing. We do have a setup right now on 5-minute reversal, guys. I think I'm going to pass on it because we've hit our growth target. But this is a pretty nice setup. We'll just watch it. So now this is another setup, use dynamic lot sizing. This is also for the swing stop. Okay, so if I set this to true, then what this is going to do is auto lot size. It won't use the risk factor anymore. So if you set this to true, dynamic lot sizing, the risk factor won't really matter at all. Okay, so it'll override this. And so it'll calculate the size of the stop loss, so if it's 30 pips, and then it'll automatically size the lots, right, to match your risk percentage here. So if you want that specific 30 pips, if you want every trade to risk only 1%, then depending on how big the stop loss is, it's going to have a different lot size. This allows you to risk a certain amount of percent per trade. And so if you have it set like this, if it's a 30 pip stop in this one trade's instance, then it will set the lots accordingly to make it so if you lose that trade, you only lose 1%. And that way, if your reward to risk comes into play, if you've got it 1.5 to 1, that means you're going to try to win 1.5% for every 1%. And if you force the minimum reward for exit, then you know you're at least going to get your risk reward. So if you're risking 1% and you have set this to 2, for example, then you know your winning trades are going to make you 2% because you forced it. Now, it doesn't mean just because you force a winning trade, you're not making sure that trade will win. You're actually making it a little harder for that trade to win, and you have to understand that because you're forcing it to go a little further distance possibly. So it's true that if you force it, you may actually get a lower win percentage, but you know your wins will be equal to your reward per risk. And I don't want to repeat that too much, but I want to hammer all that home. So dynamic lot sizing, I think this is important. You can determine how much you want to risk per trade. Okay. Now that's that for the dynamic lots. Now we get into some settings here. Okay. So in this case, let's use this for example. Would this trigger a trade? Okay. So first of all, we're requiring the L1, L2 must be crossed in our direction. So the L1, L2, the L1 is below the L2. And since because it's a 5-minute reversal, we're talking about the 5-minute L1, L2. So this is the 5-minute lane. The L1 is below the L2. This condition is satisfied. If you have it set to false, you can have it set to false. What does that mean? It means the 1-minute boxes need to be below. So the crossover is the 1-minute boxes need to be below the 5-minute boxes. Okay, that's what that means. So if you have this set to false, it still means the 1-minute boxes must be below the 5-minute boxes. Okay, if you have it set to true, it actually doesn't really matter where the 1-minute boxes are. Okay, it really is using just the 5-minute crossover as its condition. Okay, and I did that for a reason because sometimes if you require the cross here, the noise can sometimes getting a better entry. So if this hangs out here long enough, it could actually bring the 1-minute boxes above. Which is a little tricky, but as long as your 1 is below the 2 and maybe you have a white zone collapse required, that's okay. That just means you're going to get a better entry closer to the high. The next one is require a 5-minute white zone collapse. We have it set to true. In this case, see, there's where the collapse is, so we're still in that collapse mode now. So that condition is actually true for this trade. This would trigger a trade in this situation. Minimum pips from 5-minute to 1 box. I'm going to have to open this up a little bit. Boom. Okay, so I have it disabled right now because I have these set to true. If you set this to false, you should definitely have this not set to 0. This is the distance between the 5 and the 1-minute boxes. Now, I have it set to 0 and disabled because if I have a collapse and a cross, then it's okay. I really don't care about the 1-minute boxes. There's more noise in that situation because I won't mind if a price floats up to the high here and holds under the high. I would still take that trade if we're crossed and we're collapsed. So what the 1-minute boxes, if you don't disable it in that situation, they could float up and disable a really good entry on a nice trade. But just if you keep this at 0, strategy tip, make these true. If you don't want to keep these true because you want more entries, put yourself some requirements here. And just watch some reversal videos if you really want to know some strategy there. Minimum pips to 15-minute box, same thing. So here I've got it disabled. So here already we're actually below it. So now if this was set to any number, you would no longer get 5-minute reversals. Okay, so minimum white zone phase from entry is 2. So that means we're currently at a 3. That's fine. We're good. This trade is good. And because we're requiring a collapse, that means that the previous move before the reversal, in other words, the trend that led to this reversal, needs to have gotten to a white zone phase of 3 so that when it collapses, it can satisfy this condition of a white zone phase of 2 for entry. So see here, it's a 3. That means it was a 4 here. So this was a nice move ahead of time. This is setting up for a nice reversal. So now it's collapsed. It's already a 3. So this can still collapse one more time and still give you an entry technically. But remember, all the filters, the reward to risk, all has to work. I don't have any requirement for entries on 60-minute, but basically this tells you, do you want to trade in the direction of the trends of the 60 and the 240? 60-minute requirement disabled. If I had this set to say white zone expansion, that means if this is set to expand, it's collapse mode now. That means if this is expanding, then we could only take long reversals because that's the direction of this trend. Right now, the hour's pointing long. So if we had any requirement for the hour at all, even L1 in direction, we would fail. We would not get this one. This would make it so it only looks for long reversals at this point. If you had anything, so you can imagine probably the same for the 4-hour. All right, so we don't have any requirement. And look how high it's going long right now because really we're in the middle of a longer term trend. So in this case, this trade would be canceled if you had any requirement at all for the 60-minute. Because you can see this is 60-minute is saying long, and this is giving us a short reversal. Now it's very possible for this to move lower, 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 and give ourselves a 5-minute reversal long at some point. And in that case, that would be a good trade in this case. But right now, if you had any setting on 60-minute requirement, this would be a no trade. Okay, so I don't even feel bad about not getting it right now. If you set these to true, you're going to get a lot less entries. And you can imagine for the 240, even less entries. All right, let's look at the 240 real quick. So the 240 requirement, if you had this at white zone expansion, it is satisfying this, but guess what? It would need to be a long reversal. So you're saying that you want to only align your 5-minute reversals with 60 or 240-minute trends. If you do them both, that means they both have to be set up perfectly. And then you'd only take longs at that point. Might not be a bad way to get in entries on a 60 and 240-minute trends if you think about that. So if you want to get in on 60 and 240-minute trends at really good entries, then wait for the 5-minute reversals that line up with those moves. All right, and you don't have to go all the way to white zone expansion. Maybe just L1, L2 cross. I mean L1, L7 even. You know, just get the L1, L7. So if you're above that, then chances are it's going to go higher. You know, et cetera, et cetera. So these are all things that I think are really good. You just got to be patient. You're not going to get trades all the time type thing. Yeah, so let me just quickly go back to the 5-minute chart since this is a 5-minute reversal. So enable dynamic targets and stops. Just say true on those. If you say false on these, then basically you're just using your hard stop and target. That's it. There's no point in having anything else on here. But maybe you just want to go for straight up 2-to-1 reward to risk, you know, 10 pip, 20 pip, and don't want to enter anything to interfere. That's fine. Turn your dynamic targets and stops to false. Defense targets and pips, I've got it set to 21 pips because, you know, referring to pips, we got to add that extra 0. So this is set to 21 pips. Okay, so what this does is basically if the condition breaks down, so if the white zone expands or L1, L2 crosses against, then it will look for less of a pip total. So instead of 100 pips, it's only going to look for 21 pips if the market breaks down. All right, and now minimum roadblocks for stop, I've got it disabled because anything over 4 is disabled in this case. I know there's 5 lanes, but the VTA only looks at the first 4 for its signals. It doesn't look at the 240 for its signals, only the first 4. So if you put 5 roadblocks for stop, it's never going to hit a 5-column roadblock. It's effectively disabled. I disabled it because I'd rather use the previous low as a stop. But say you're in a trade and you hit a 2-column roadblock. Maybe you're not at the highs, but you're at a 2-column roadblock. Then if you put 2 here, that means if that 2-column roadblock gets breached on the other side of it, it will take you out of the trade. I personally prefer just using the swing stop and that's it, and then disabling this. Alright, and then I've also disabled the L2 trail stop, which is just once this trade gets moving, then the L2 becomes the trailing stop. And then require candle close for stops. That's an important one actually. That just means if your swing stop or any dynamic stop is breached, it will not take you out of the trade unless the actual current candle closes. So what candle is that? It's the 5-minute candle. So a 5-minute candle will need to close beyond the stop. So it has to close, which means you risk more pips in that situation. You risk some more pips because it has to close. That means you're not going to get out right at the pop. So whatever you've calculated as your dynamic stop, you know, 70 is a lot, but if it came out to where your swing stop was 68 pips, if you waited for a candle close, then it could breach, it could go 75, 80 pips against you before closing, because 5 minutes could be a long time to close. All right? So that's the basics of the 5-minute reversal. I figured I would do that since we have one. And let's go ahead and try to take this one. It's not a bad setup. White zone phase of 3, we're collapsed. Everything looks good. Let's say, okay, so to do that, to try to take this trade, we need to allow trading if levels exceeded, because we hit our growth target already. So let's set this to true. So just for this setup to take a trade, it was already dynamic, so it acted like a one-click. Okay, that did not take long. Let's see what happened. Wow, that was fast. Okay, within that second, it was ready. Our reward per risk is 3.3. We're just risking 16.6 pips to the high to target 54.7 pips to the low. Now this is a L7. It will come up closer, so by the time it exits, if it wins, it won't be 54.7. What else? So it definitely has acceptable reward per risk at 3.3. The dynamic lot size is 0.58. Now it's a $10,000 account, so I can tell you it's about a little over a half a position. You can see we're 1.1 ahead, but we're 0.6, so a little over half a position, and we're in. That kind of happened a lot faster than I thought it would. Talk about an immediate example. Oh, let's see, what else can we look at about that so we can see, just to show you how everything works here. So it tells you where it placed the swing stop. So it's risking 16.6. It placed the stop at 36.16.5. So we must have got in at right big figure. Yeah, we did. So 35.999. So we got in at basically 136 big figure. Stop is 136.16.5. Why did it place that as a stop? Well, let's see. There's the high, right? The high is 15.1. 15.1. So what it does is, why did it say 16.5? Because it adds the spread in there. So it's 16.5 is where the stop is.